We are live. We are live. Live indeed. Okay. We are live indeed. All right. Cool. All right. I think we could get going. This evening's live stream is not going to be too in depth or even a longer one, a long, the usual standard 1 hour, 30-minute range one. It would probably be somewhere closer to a 30-minute, hyper focused one. Okay, never mind. That is just gray hair. Okay. So I think the main thing I really want to focus on is macroeconomics. Like, I think a lot of times we end up ignoring that, so much so that we miss opportunities because we are so locked in on one thing. And that one thing is the one thing, you know? And when we're looking for opportunities, we kind of get a bit narrow-minded in what we're looking at. And I also recently just posted a reel kind of going over this as well. And I just wanted to drive this point home with the live stream as well, that that it's very important to look everywhere, right? Because if you were to simply just look at one place and receive all of your information from one place, you as an individual, such as business, would find yourself in some form of a blockade, right? Like, if you get all of your news from one source, if you get all of your groceries from one place, you're setting yourself up for risk. What if that one place gets shut down? Now what? Where are you getting your groceries? Where are you going to grab your coffee from? Where are you going to get the news needed to understand what's going on in your neighborhood? Right? And it's similar to what our teachers taught us in our original first few months, or even just through school, right? Like, they wanted you to write a report, whether it's a 2-page report, 10-page, maybe we're in college now, we're talking 10, 15 pages. They don't want you to reference one source to build a whole 10-page report on. No, they want you to grab it, to grab data points from here and data points from here and here, and then try to figure out how to marry the data. Try to figure out how to find congruence amongst pieces of information that actually will then collectively tell the whole story, right? Similar to Venn diagrams, where we would have one side of the fence here, one side of the fence here, and then right in the middle there's an overlapping period where both parties are in agreement in some way, shape, or form. And finding that one party, or finding that, yo, what's up, Cody? What up? Finding those groups are really where a lot of value sits. So if you're only looking at one data point, one place of truth, one stock ticker, you will only find opportunities in that one thing. So it is also your job to be a detective, to continue to look around the world, right? We live in, what is that word we live in a period where we benefit from globalization. That's it, right? I can go on eBay right now and buy some cool Japanese denim from some guy in Japan, and it'll be shipped to my door in maybe a week or so, or shoot, maybe overnight, because I paid overnight shipping, right? Like, I think I have an Aura ring. My Aura is a company in the Netherlands that is a health data company, and my ring isn't doing too good right now. There's a battery issue with it, so it stops it from like tracking data properly, and and I requested a replacement for it, and because of that, they effectively overnighted me a new ring. Right, it didn't come in yet, right? So the shipping it cleared customs, it went through. But point being is, if we didn't know about this company that makes this creation that tracks your data and your health through things such as globalization, through the internet, right? I would maybe be wearing a WAP band, or a WAP, I don't know how to pronounce it, or maybe I'd be wearing an Apple Watch, right? But to me, this works the best for me and what I like, right? It's not that intrusive. I can still wear my Rolex instead of the WAP band or the other pieces, right? And I've been able to marry the data, right? It works best for me because, through globalization, through external data points and so on, I've been able to find this opportunity to wear this as my health technology device of choice, right? So when we're looking at life, or in Whoop, it's Whoop, okay. Whoop, my bad, not WAP, okay. So when we're looking at life and other bits and pieces, like, you can trade one stock and one stock only, or one ETF, or get all your news and information from one source. Sure, you can do all those things, but you also have to understand that you're trading a market. You're trading a market with your hands tied behind your back, right? Like, and I was kind of the same way as well, because there's certain sectors that I won't touch. I don't really know much about biotech. I don't know enough about drugs and the production of drugs and the possibility of them getting approved by the FDA. And in a way, I still don't touch biotech too much, but I understand that that's an opportunity there. And every now and again, I'll take a peek. Maybe I'll buy some shares. I'll try and dance with it a little bit. But am I going to go gung ho potentially? Probably not. But all that to say is, like, when in markets, do not limit yourself to just one thing. And by trading one ETF, trading one stock, or only that, like, you kind of pigeonhole yourself into just one thing. And then when that one thing doesn't have a trend, or it's not as easy to trade, you end up forcing trades because you only know that one thing. Instead of saying, oh, there's not much opportunity right here, right now in this one thing. Let me go look elsewhere. Let me go see what, I think I saw this happen. Okay, right? So point being, all in all, like, I think trading as a whole should really be I think, to me, trading is probably one of the most empowering things in the world. And that's also just my opinion. Some other people find different things to be empowering, right? But in a world where effectively only people that really care about you are your parents, maybe your siblings, you never know. Your loved one, your significant other, right? Like, the markets can find a way to look out for you if you look out for it, in a way, right? If you look out for the opportunity. So all that to say, again, like, I was just kind of driving this, like, more broad stroked stories, like, look for the opportunity too and shoot over there. You don't have to stick within one thing. Don't be afraid to challenge yourself. I don't understand what this is. I don't understand much about bonds. I went and bought a book about it so I can try to learn more about bonds, so I can understand that the difference between municipal and treasury and TIPS bonds, right? Inflation protection bonds, like the different forms of debt, types of fixed income. I don't really understand too much about, the inner workings of a hedge fund. I've never been in one. Unfortunately, the streets never allowed me to enter through those doors, and I just found another way to get through. Well, I'll learn indirectly, right? I never got the chance to sit down with Stanley Druckenmiller and George Soros, so I bought their books so I can read them. Right? Like, reading within itself is like one of the the best, lowest barrier thing that you can do. Like, this book was like $17, something like that, on Amazon. It was printed in like 1996, so it's definitely older, but like, it has so many gems in here. Another book here, I ended up finding this on the road. I found this on the road in New York, just on the sidewalk, just literally posted up. One of the most insane books I've ever read to this day, still. And I still reread it. I just reread chapter 14 just yesterday. Right? And there's still more things I'm finding out, and things that I read about last time I read the book, maybe summer of 2024, that I was like, oh, okay, maybe I didn't grab that back then. Maybe I didn't experience it in the market when I was trading, or so now I've experienced it, and I have a different perspective on what was said or what was written, or even how to build a hedge fund. Right? Is Michael Husby, I believe, or Husby? I don't know how to say his last name, but he gives the fundamentals on the actual structure of building a fund, because he's built than before, right? Like what happens with LPs and GPs and different corporate resolutions and all this like jargon, decline side letters, and I don't know. It's a bunch of stuff that legal stuff. I don't know any of this stuff, but like I kind of want to learn it. So yeah. So point being is, if you want to learn it, just go learn it. Just go learn it, right? Like you can sit here and talk about these things, but just go learn it. Oh, I do want to read something though from this book. Invest First, Investigate Later. It's a book written on the 23 Secrets from George Soros, the legendary investor. And in the chapter, I think this would be a cool kickoff to what I want to really get into. In the chapter, in the 12th investment secret, anticipate the next trend. I'm not going to read the whole thing, but I'm going to kind of like hop around from page to page real quick just to try and marry the data. It says, Soros is consistently looking for sudden shifts in the stock market. Such shifts occur, for example, when investors have refrained from taking positions in a certain industry stock group for a long time, but then decides abruptly to purchase those stocks in great quantities. In the wake of these sudden shifts, self-reinforcing moves might occur in these stocks. Soros has always been keen to test his theory on these stocks, searching for these self-reinforcing moves. Once the self-reinforcing mechanism takes over, the stock price climbs dramatically. This is wonderful for the stock group because now its companies will borrow more, acquire more, and find their earnings soaring. Unfortunately, this lasts only for a certain amount of time. And with the onset of growing competition and market saturation, the stock becomes overpriced and then the price declines, benefiting the short sellers enormously. Cool. So that's that. Searching as well for foreign economies about to exactly that, Cody. A lot of times when I find flow on certain bits and pieces, I'm like, why are they putting $1 million here? Well, who? That's interesting. Let me look over there, right? That huge the if you look at it like a faucet in a way, right? The faucet or the water that runs through the said faucet is the capital, is the purchasing of these assets, and then the actual plumbing is the market itself, right? The fact that we can open our broker and buy and sell, and then in other bits and pieces, right? Once you turn on the faucet, now the capital flows, which is basically what he's saying. These shifts occur when investors refrain, and then now they're not refraining. Now they're putting their capital to work. And then what happens at that point is that they go ahead and the capital starts to flow through the pipe until the sink gets full of water. And what has to happen? You have to turn off the pipe because now it's just so much, right? So much where competition comes about. So much. It's to the point where, certain things or timing and market saturation or overpricing starts to come into effect. And the market has to start to say, wait, is it worth this amount? Right. So Soros is searching as well for foreign economies about to take a giant leap forward. Soros has sought to capitalize on foreign stock markets, asking which countries were opening their markets to foreign investment, promoting new policies for economic stabilization, or committed to market reforms. Soros hoped to get a leg up by getting in at the wholesale level, like any good investor. Said one former associate, he was trying to buy a quarter for a nickel. If there were immature markets right, Brazil. If there were immature markets, as was the case in France, Italy, and Japan, Soros drew a bead on them and hoping for a 6 to 8 month jump ahead of other investors. Nothing complicated about it. Soros had simply learned the trick earlier than the others. Accordingly, he purchased Japanese, Canadian, Dutch, and French securities during one part of the 1971. The Soros Fund had the quarter of its investment total invested in Japanese stocks. A gamble that paid off, and the fund monies doubled, basically. Soros and Rogers had shrewd selections in stocks. On one occasion in 1972, an acquaintance of Soros informed him that a private commerce department report described the growing American dependence on foreign fuel sources. Accordingly, the Soros Fund purchased large amounts of stock in oil drilling, oil field equipment, and coal companies. That same year, Soros and Rogers foresaw the food crisis, and after purchasing stock in fertilizer, farm equipment, and grain processing companies, earned impressive profits that year. A year later, in 1973, came Arab oil boycott, which caused energy stocks to soar. Around this time, Soros and Rogers craftily identified the U.S. defense industry as a potential profitable source on investment. In October of 1973, Israel was caught by this surprise when the Egyptian and Syrian armed forces launched major attacks against it. In the opening days of the war, Israel was on the defensive, suffering thousands of casualties and losing many planes and tanks. Soros concluded that the Israeli military technology was antiquated. Then U.S. technology might be as well. Realizing that its hardware was obsolete, the Pentagon would have to spend large amounts of money. This thesis had little appeal to most investors. Defense firms? They had lost so much money once the war in Vietnam drew to an end that financial analysts did not even want to hear anything further about the defense industry for the time being. In early 1974, however, Rogers started to focus in on the industry, a situation tailor-made for Soros and Rogers. The potential in the defense industry encouraged Rogers to travel to Washington, where he talked to the Pentagon officials. He also journeyed to defense contractors elsewhere in the United States. Right? So those are just bits and pieces of that chapter, the 12th investment secret, according to George Soros, and anticipating the next trend. Put my handy dandy bookmark, my violin, my integral violin. Look at that. Wow. Back in, and we'll move on. Right? Like that alone connects back to what I was saying about anticipating the next trend. So since the last stream into now, we've kind of talked a bit about what? We've talked a bit about, I'm not even fully remembering what that last stream was about, but I'm pretty sure we did more charting and things of that nature. But I think at that point, we had already started this conflict in the Middle East. And from that moment, I said, all right, this is usually the playbook for conflicts in the Middle East. Long oil, long metals, because it's safe haven, and then, short equities. The VIX is probably going to be up. Things that connect the world in a way, globalism, there's going to be some issues. Yeah. There's definitely been a bearish shift, right? From maybe mid to late February, things started getting a little weird, right? And the interesting part is we could see it in the charts before we even get there. So let's take a look. Okay, cool. This is that piece. Let's see the charts here. Let's just take a look at, actually, let's take a look at futures instead. If you take a look at futures from the monthly point of view, we started to curl up. We just couldn't get new highs, right? We just kept on dancing back and forth at the beginning of the year. Pardon me. From the beginning of the year into as of late, like late February, you just couldn't get new highs. You just started to chop around here because nothing new was really coming along the pike to help it get higher. And all while that was going on, I'm sitting here looking at VIX, and I'm like, well, looks like the VIX bottom at the 12th of January. And as time went on, why is it doing that? Maybe if I tried TradingView from the app instead of the browser window. That's so weird. Okay, cool. You see me now. Oh, it just showed up. Oh, maybe it's just like lagged. Wow. Okay. I'm trying to show indexes from this window now. How about now? You guys see the VIX profile, VIX complex that I usually share in Integral Vote? I think so. Yep. All right, sick. So we chopped around all market. We chopped around, if you look at the S&P 500 from the basically like December into early January, we kind of just chopped around. We couldn't get new highs, made new lows. Couldn't get new highs, made new lows. Negative news started to be more of a moving factor where we would touch highs and then break down again, and then touch highs roughly and then break down again. So it was like, okay, like we're struggling right now to get good news to carry us higher, right? We got the main drivers, the Mag 7, not as strong as they usually are. So it's hard to move us higher. Like look at the mags over here, all super red. And a lot of them are in like major drawdown in some extent. Right? And they have been all year long. Then here's the key thing. The VIX bottoms on the daily level. It bottoms. This is the VVIX? Yeah, this is the VIX. Okay. The VIX bottoms basically Christmas Eve. And from Christmas Eve, we have not seen that low again. This entire time, more and more protection has been put on. More and more protection has been put on. This entire time. And every time it tried to make a new low, it rejected it, and we went back higher. We tried to make a new low. Nope, higher. Because there's a massive appetite for protection. Because there's so many problems going on at hand at the moment that the market's pricing in, hey, we don't know what is going to actually crack first or what's going to crack in like at all. So we just want to protect ourselves in the meantime. And the market's been pretty smart on that so far because, I mean, I can go through tons and tons of issues right now, right? We got and not just the obvious ones, right? We got credit default spreads widening, right? Where high yield debt and corporate debt is showing higher yields because it's now more questionable that these companies are going to be able to actually pay back their debt, right? You got Mag 7, these big guys spending 100%. I believe at this point, like based on this last Q4 report, it showed that, or sorry, Q1 report basically. Was it Q1? No, Q4 report showing that Mag 7 is spending almost 100% of their cash flow on CapEx. And the actual return on AI, in investors' point of view, is still questionable right now. It's still questionable. So that's another risk point. Credit default spreads widening. The major cash companies that actually are 40% of these indexes, 30% of these indexes, are using all of their cash flow they pivoted from asset-light businesses to now asset-heavy businesses. Then we got AI itself, even though it's wary in the point of, oh, is it going to be that foundational? But now you got them taking out software. Software is trading down. I think software's in a recession. They're down like 20 some percent. If we just look at that specific sector. Then on top of that, we had the other issues, the real issue of like at home base, right? Like, what are we going to do with our debt as a nation? There's no plan for that. We got government shutdowns left and right. We can't even travel within the nation that we own, that we're in. The TSA line's gone crazy, right? And then the people that are in power are just sitting there pointing fingers at each other, like, oh, this is Democrats versus Republicans. They can't do anything. They literally can't even push the ball forward to the next step to even help this whole scenario out. And then on top of all that, inflation's still a bit high. We have yet to get back to pre-COVID levels, which at this point I'm fully convinced we'll almost never. Well, I can't say never. I'm a probabilistic man. I won't say never, but we almost will not get there in this regime, right? Then we hear just this past weekend, after all these months of, oh, inflation's not going to be here with tariffs. Oh, that's another issue too, tariffs. I didn't even talk about that yet. Tariffs, another unquestionable part. And tariffs won't affect inflation, I promise. Don't worry. This is what we get our money back as a nation. Okay, sure, we'll see. Right? And then just this past week, we see the producer core expectation come in way higher, way hotter than it's supposed to be. And the producer inflation number is the leading indicator to the consumer. Because at the end of the day, the producer, the company, the person that's creating these products and goods and services are only going to eat so much of the cost before they pass it to the consumer. And at this point, I'm sure they've fed up about it. We're already almost quite literally a full year into tariffs now, right? We've kicked the can on the road. We started off at these astronomical percentage rates, and they've come in dramatically, right? But guess what? There's still no long deal term in place. Actually, in fact, Trump was supposed to meet with Xi Jinping and his team in this coming week or so to finalize and create a more concrete deal surrounding tariffs. We don't have that yet. Why? Because now we're dealing with a whole other issue now in Iran, right? And then what that issue is creating is a whole nother arm of 3 or 4 cause and effect points that are creating more issues as well. The Strait of Hormuz, that shipping corridor is literally the global shipping corridor for almost everything. Oil being one of them, chemicals and fertilizers being another, liquefied natural gas being another form or deviation of oil, of energy, right? And now we're stifling Southeast Asia as a whole, as well as Europe. Europe is not able to get the liquefied natural gas the way that the way that they usually do, and Europe outsourced all of its energy. Same thing with Asia. Asia is like 90% Iranian, that region, Middle Eastern oil. Now they're going to have to pivot back to coal. Well, that creates an opportunity for people that are coal investors. Maybe you want to look into some coal names. I know BTU is one of them. I'm pretty sure that broke out last week as well. They're going to be buying more coal, right? And then now things of, oh, we're entering a rate cutting cycle. Don't worry, like rates are going to go down. Rates must go down. We need a dovish Fed president in the central bank. I'm hearing that we're going to get Fed hikes now, because how else are we going to fight this sticky inflation that's going to trickle through the PCE into CPI, and then ultimately trickle into oil prices? I mean, not even trickle. That thing's full on faucet. People on the West Coast are already paying $6 a gallon, right? And just 2-3 months ago, I'm texting the homie like, yo, what's the price of oil? Oh, it's like $2 change. Calm. That's no longer the case. You know? It's going to create tons of tail risk. And right now we're sitting in this world where it's like, oh, don't worry, like, Trump's going to say something, rah, rah, market's going to, okay, maybe it will, but like, can he really alone solve all of this without going back on his word, right? Without cutting tariffs back dramatically, without stopping this conflict in the Middle East, without tacoing everything that he has built upon of what his legislation seems to be the forefront of what he cares about. Right. It's super expensive. So we see the VIX continue to show people want protection. And guess what? They're not getting caught in surprise anymore. People aren't getting caught, like, for example, I feel like the market usually capitulated or usually bled out dramatically, right? Because people were caught by surprise. But I think in this case, knowing who is the US president and knowing, just like how the pieces continue to trickle over more and more, I think people are no longer being surprised or trying to be surprised. Oh, I forgot one more problem. Private credit. First brands came out, right? Or like, you got these people that are invested in these assets for long periods of time. They're gating funds now, right? They're capping it. The cap was there before, but people want more of their funds back from these private credit funds. But they're not really able to give it to them. Private credit funds are facing tons of pressure as well. And then guess what? Now they're going to deal with the fact that rates are going to go higher now. Treasury bonds are flying. Inflation bonds are going to fly because of this. So we got all this undefined risk, guys. Like massive amounts of undefined risk. That's why this stuff is going higher. All these risk assets, at least, are going lower. Right? Oxy is gone on a tear because of it. Things are lower, right? And not to say that, Trump can come out or Iran can say something overnight and we don't fly 2% tomorrow. And that's not what I'm saying at all. But what I'm trying to say is that would only partially fix the issue. Like, I'm talking about slapping a piece of duct tape on a cracked tub. Like, is that, like, it may stop the water for now, but like, right? Like, and these longer term moves are really where the juice sit. Sure, you can trade on the hourly and catch a dip from here to boom, and that's done. You're good money, move on, right? But the real juice sits in your ability to possibly really catch that momentum swing. That's why I read that paragraph in Invest First, Investigate Later. The ability to anticipate the next trend based off of these data points. Qatar Energy reported that Iranian missiles striked their LNG factories, destroying $20 billion worth of assets. You think that's something we can just recreate because the Strait of Hormuz just reopened next week or reopen tomorrow? No, it needs time to rebuild those facilities, to then create that gas, do all the necessary chemistry that's needed. I don't know those bits and bobs and pieces. I just know that supply and demand says that right now there ain't no supply and the demand ain't going nowhere. So that means the asset price got to go up. Done. And it's my job to go find those asset prices, find those assets that will be and can be affected by it, and then apply a plan to it. You know? Because even if we do open this trade, how does this fix the problem tomorrow? I kind of don't think it does. Oil gapped up at open of futures back into the 100 mark, but we fell down a bit. We fell down pretty dramatically here, right? So it seems like the market is kind of pricing in some more positive news at this 100 level that's stopping it from really breaking back above and getting into more exasperated levels. I do still think it's possible, though, for us to go touch those levels. It is very well possible to go touch these levels. And it's about, okay, what happens next? Are you positioned to capitalize on that or not? Or you're positioned to capitalize on the other side, right? I think that's pretty much the basis of what I wanted to speak on today. Why are you seeing ES futures? I was showing you oil. What the heck? Like, I bought a whole new computer to fix these streaming issues. And now, and to do more cloud stuff, to do more compute. But like, damn, I feel like I'm still having issues with the streaming stuff. You seeing it now? You seeing oil now? Or crude futures? Okay, cool. So I think based on that and based on all the other pieces I just said, I think I want to go over a few things. I posted in the Vault. I posted a report from Financial Times talking about the world's faces gas supply cliff edge as they are missing a ton of LNG shipments. So, and I know this from reading, and I kind of don't want to make this whole thing about oil, but I guess I kind of have to, but that's what the whole market's about right now, at least at this moment. Shoot, but I guess that's what it kind of makes sense. So now you guys can see inside the integral volt. Just kind of see a little bit of the cyclical flow. War, AI, growth, gloom, energy positioning is overweight. Tech positioning is aggressive, is underweight. And cyclicals, especially financials, are extremely underweight based on growth fears now. Right? Watching these positionings, watching the flow, it gives you an idea as well as a piece to put in your mental model to understand that when these things happen, they tend to cause this. When this happens, they tend to cause this, right? Like dollar strength. As the US dollar continues to rise in strength, gold, silver, other forms of metal tend to have a negative effect, or it doesn't end up being a positive effect because of it. And these relationships, to web it out and kind of think through that, those relationships are going to be super key. As you understand macroeconomics a bit more, a bit further in, you can quickly grab these pieces and these relationships and generate them into trade ideas almost immediately. And then you can load up, snipe it, and let it ride. And then try not to poke it too much. Try not to interfere with it too much, and just kind of let the situation happen. Because a lot of times you may dance around the position a bit too much, trying to get cute, and I'm guilty of this as well, right? I'm not saying I'm immune to this at all, right? I'm about to show you as an example of me doing that exact same thing that I'm telling, like, that I shouldn't be doing or I don't want to be doing. But I did it, and it sucks, but I did it. I mean, yeah, I still profited in the end from the general direction, but I still did it. So in this LNG crisis article from Financial Times, it says Qatar produces a fifth of the world's liquefied natural gas, and it had to stop exports after Iran blockaded the strait. And then later on, they ended up breaking. Let me see. Where was that at? Qatar had to redirect 24 cargoes. It just got insane. Oh, here you go. Asian LNG prices. That's definitely going to go up. Buying LNG on the spot market is prohibitively expensive for Pakistan, and Asian LNG prices they seem to be going up higher. And I mean, hey, there's no more supply, or there's not much supply, and the supply that is there may not even be able to get through the strait. We're going to be supply constrained. Prices are going to be sky high, if not already, right? They're showing how it lacks alternative fuel options. And then as one of the biggest buyers of LNG from the Gulf, Taiwan is grappling with the consequences of its attempt to shift from coal to cleaner burning gas while phasing out nuclear energy before the shift to renewables. It moved quickly to secure replacement cargoes immediately after the war broke out. So it seems like Taiwan may be not as negatively affected. And then Japanese utilities are holding back on LNG purchases for now. Another trader confirmed only a few buyers are considering to spot cargoes, while Japan is the world's second biggest LNG importer after China. It is less exposed to disruption of flow in the Middle East, as only 6% of its supply passes through the Strait of Hormuz. So Japan may not be the one that's affected by this. China does get 30% of its LNG from the Gulf, but has more domestic gas production that it can switch back to, like coal-fired power generation if needed. Again, not as affected as some other nations would be just as I believe Europe is mostly affected right now from this than it is the Asian countries. Then if you take a quick look at the CTA positioning on Brent oil, they're max long right now. So what that tells me is if they're basically max long right now, we can't get much higher, right? Unless another massive event pulls us higher, right? We need more types of investors, more different individuals to push us higher, right? So the CTA people, these guys, commercial hedgers, those guys that are really locked in on that point, they're basically max positioning right now. And something super dramatic would have to happen for them to continue to increase their positioning, at least for the time being. That doesn't mean that oil can't go higher, though, right? It just means that the buyers have to kind of come, like the massive stream of buyers have to kind of come from somewhere else. What else? Right? There's another awesome print here too. I love to connect, global countries with themes and potential stock names. Oh, I love this. When I saw this piece come through from Jefferies, that bank, I was like, yeah, this is beautiful. Love it. Right? Like Brazil, oil and gas, Brazil as well, banks, those two companies, or those two sectors really are where they're like super focused on. South Africa, gold, like all that's there. Korea, technology, Samsung. You get to see all the different things as to what these countries provide for the world and the global economy. But yeah, so that's that. Another thing is, quick thing, I guess I want to talk a bit about Oxy here, and the same thing on oil. End of January, I believe I had some February 20th exposure that I wanted to roll out to the April 50 calls on Occidental. And Occidental, extremely underbought name at the time, at least. And it was showing a ripe opportunity to keep upward. Great flush balance sheet filled with cash, filled with inventories, filled with the ability to create and provide oil. And I drew up that chart logic. And it looked amazing. This is basically February 3rd. I was like, yo, we're about $45 into 50 by April range. That seems very doable. We're talking about $5 here on a name. Like we're talking about 2 months, almost 3. Yeah, about 2 months out in time. It's a possible duration here. I said my profit targets, they were just like, they didn't take into account this oil squeeze. And there's in a way, there's no way I could have known for sure that this was going to happen just yet, at least not until, maybe around, I guess, end of February. Was I really aware of this? But by that point, I'd already exited the position, I already exited the position. I probably, if I'm remembering correctly, I think I did like 110% profit on that position. Like pushing, like taking a great, good size, good duration, match the theme. I knew oil was going to become a little bit more important, more specifically because the Venezuela stuff kind of made me lean into oil a little bit more, but didn't think this kind of supply shock was actually down the pipeline to come. Had I had an inkling of that, maybe the situation would have been different, but like this is more of a reflection point of view as opposed to a woulda, coulda, shoulda, right? I really hate taking that point of view of like, oh, I should have done that, but like really it's more so just a reflection side of things, just to figure out, okay, where can I improve on? What am I doing wrong here? Why didn't I maximize this idea? You know, instead of looking around for other ideas, maybe I should have found a way to maximize this idea instead. And then Occidental goes ahead and heads in north into 60, you know, in a rather short period of time, in about a month. It finds its way into 60. And those same contracts that I had up 800% from point of entry. You know, he's one of those trades that effectively could have been generational. You know, it's just, I guess, my responsibility from here going forward to make sure I journal it, make sure I think it through, figure out where were the gaps in my thinking, how could I have potentially, held out longer on these pieces to be able to actually hold this for longer, and go on from there. But this is a part of the scenario, right? You can marry the data all you want. You can find the trade. You can set it up. You can follow all your rules. And in this case, I did follow all my rules, so it's not a bad trade by any means at all. No, 110% will almost never be a bad trade. It's just trying to figure out how to really maximize it. Yeah, for sure. So yeah, I think that's kind of it. I mean, like, looking into, I guess, what we may see, heading into tomorrow. I think, well, looking at futures right now, I mean, Bitcoin cracked earlier this evening, or yesterday, or both. I mean, it cracked. Dollar is slightly lower, but not bad. The S&P is lower than where we closed, at least, right? We did kind of have a little peak up, but we'll see what happens overnight. I still think there's a lot of stuff that can go down between, by the time I lay my head to rest tonight and by the time I wake up tomorrow. So I think there's most certainly an opportunity there as well. It's not down as aggressively as I would like, but we're making our way there. And nothing wrong with that. It's really just a matter of trying to figure out what would tell me that I'm wrong. Right? Where do I need to exit off of mass pain? Right? Metals down, and they're going to continue to go down for the time being, especially because of that speculative run that we had into the top of the year. What was the safe haven is now, the GameStop. It's now the Oklo, in a way, because it got to retail, and not just like smart retail and like, intuitive retail. It's like it got to retail. It got to the everyday Joe. That's what I'm trying to say. The people that aren't in markets. Should I buy silver now? Should I buy gold now? It's like, probably not, but like, I mean, sure, dip your toe into it, like, sure. I mean, what, you buy 50, you buy 1 ounce of silver. What are you gonna lose? $80? Like, come on, like. Yeah. So, I mean, I'm still thinking at the macro level, because really in these names, in the tech names, they're not really going to be there. At least I don't think so. But we did just talk a little bit about liquefied natural gas, and VG being one of them that I'm interested in. And next as well. And the ticker LNG as well. Right? These names have already popped. Honestly, these names are up like 100% on the year. 44% on LNG, 129% on VG, like massive, insane. And then alternative oil energy points are here in PBR, in EC, in these other markets. Also to reference the thumbnail in this one, it was really the look on my recent trip to Mexico. Mercado Libre. I still don't know too much about this company, but this goes back to what I was saying about understanding the shift in things and understanding the shift in society, countries, even other countries, right? In Mexico, while I was there, enjoying my time, I saw this company pretty frequently. And I saw trucks out there making deliveries of some sort, I believe. They're like, to my understanding, they are the Amazon-ish of like South America. I mean, and Mexico's not South America, but you get what I'm trying to say. Like that's Southern Americas, roughly. And I think there's a huge opportunity there, similar to the point of what I was mentioning about Brazil and other bits and pieces. So if I were to share with you all this piece and then just come here and type in this, I believe I shared this point as well with the Integral Volt team. The revenue by country. The revenue by country shows that Brazil is their leading one, right? With Amazon, they're not with Amazon, but they effectively do what Amazon is doing as well for here in the States. And they also have a financial services arm that does credit card processing and things of that nature. See, I wasn't really aware that Mexico had the infrastructure to do tap to pay. That was a piece of my concern while going there. I was like, oh, will they have tap to pay? Maybe, maybe not. Maybe at certain places, not at other places, But literally, even the street vendors have tap to pay. Like, what? I was thrown. I was kind of appalled by that one. I was like, dang, this is pretty cool. I thought tap to pay was like cutting edge technology in the payment sector, roughly. But I guess at this point, it's been so. I mean, I guess Google Pay has. Yeah, you guys remember when Google Pay was like the original one, and they had the NFC readers and stuff, and like, sheesh, man. I wish there was a way to like purely long that. I remember being in my dorm freshman year of college and like drawing out a little thing in an old booklet I had about like NFC readers and like how that was going to change everything. Man, sheesh. Just looking back on that, that's actually absurd. Like what I was thinking then. I know what the book looks like. I don't know where the book is, but I know exactly what I drew out and what I wrote on that. But anyways, and it seems to me that the second largest country by revenue is Mexico. And that market is growing. So if you ask me, I mean, that's a clear path for Melly to get into 10 billion in revenue. And especially if Argentina follows suit, like, what are we talking about here? Right? Like, and if I go check where we are in the financial point of view, where are we? in terms of rates and the bank and how that works. Like, dang, is it not in here? Maybe it's in research then. Here we go. Global central bank policies and rates. Excuse me. Brazil's target rate, or the rate today, is 14.75% interest from their bank, from the central bank. Madness. And they're looking to lower it. Right? They're looking to lower it. If we go and take a look at Mexico, the overnight rate is 7%. Yep. And their inflation is at 4%. And the last move they did was to cut as well. They cut in December. They haven't cut since, but it's another thing to look at. Just trying to think as to how that could, like those two being their main two countries. Argentina, what are they doing? 29% bank rate. Oh my gosh, what's going on in Argentina? Wow. And their their CPI, their inflation rate is 33%. That's insane. Right? So if Argentina can find a way to, maybe get their inflation rate into the teens, maybe 15%, 17%, and they cut rates, well, if they cut rates, that would be like pushing their inflation probably a bit higher. Oh man, that's gonna be tough. Just trying to think, like what all in all would be a moving factor on Melly. But I do think that's going to be a huge thing for the Americas and the growth rate of that region of the world and how it ends up affecting, the overall piece there from a macro point of view. So yeah, that's a ton of macro. That's a lot of that. That's pretty much it for me. Maybe, I guess, one last thing I do want to touch on before I head out. I don't think I mentioned this from my last stream into this one, but the end of January, I was fortunate enough to be featured in on Business Insider, featuring my business, what I plan to do by bridging data, markets, and community. Super cool moment for myself. Just kind of wanted to share that with you guys. If you want to give it a read, I talk about the agent report. I talk about my live streams here on YouTube. Yeah. And some other bits and pieces. So I think it was pretty cool to see that come through. I'm very grateful. I've worked countless years. Well, not countless, but I guess 7 at this point. Just writing, just trying to understand, just trying to marry the data, and just trying to be a better investor each and every day. But I'll end the stream out here, and I'll catch you guys in the next one. Peace. Have a good night. Sleep tight. And I hope the bed bugs don't bite, I guess. Yeah? Peace, y'all. Asian out.